Hi everyone, welcome to the pre-watch video series on income statements. If you're watching this, that means your foundation program is over, which means that in spite of you being a non-commerce, you've crossed the bridge to enter the territory of hardcore financial accounting. Well, as they say that well begun is half done. So I would say that the performance in the live classes has been very, very motivating. And I am truly very, very confident that you would be able to now build upon the foundation that you've created in almost like, 10 to 12 hours of hard work that you've put in. So in this video, I'm going to start talking about something called as income statement. Well, that's not a very, very alien concept now. And I'm very, very happy that we have spent that kind of time with each other in live classes, because it's always now easier for me to, take from where we have left in those classes. Um, Between income statement, balance sheet, and cash flows, the time that we are going to devote is going to be a bit more in income statement, because it's the first statement that we are drilling deeper into, and also it has got a lot of the reader point of view. It has got a lot of masala for the user. After all, it talks about the performance of an entity. So, and you all are also aware that performance is a connect between the two positions, so that also makes that income statement all that important. So people, I'm going to start off by sharing the screen and giving you a format that you already have seen before. This is this was perhaps done in the second session that we met, and there I had categorically made a point that the way you look at it is not the way a chartered accountant would make it in step number 3. Remember the anchor slide? You had the business transaction, input accounting, output of reporting, and finally the user analyzing it. So that's not really the income statement that you're going to see in step 3, but that's what you at step 4 will be converting it into this format. So in one of the live classes on income statement, that would be one of my assignment to convert a reported financial statement by a CA into a more legible income statement for an MBA or any other B school for that matter. So people, you got to just understand that the data remains same. The way you want to present it changes a bit. So let's not be bogged down by too many formats here. Anyways, I'm not a big fan of format, and we have said that before in our classes. We are going to focus upon the structure, and here are certain key aspects about the structure. So I am dividing this income statement into two parts. First, the operational half and the non-operational half. Reminds me that we have done 3 levels of activities: operating, investing, and financing. So if the first half is operating, that leaves me investing and financing in the second half. So you see here the interest on debt. This is typically an expense towards the financing, the capital structure. And you are also aware now that your equity and preference shares don't have a charge on income. Even if they don't, the entity doesn't earn profit, there is no mandate to pay dividend. So we call them appropriation, distribution of profit. Whereas in case of debt, you are aware that we anyways have to pay the fixed interest. So we call interest as a charge on profit. Even if there are not enough profit, interest need to be paid. So that's what you have it here, interest on debt. This item here is basically any investing income that you have. So you're aware that investing income could be anything related to the non-business. Let's say Rendaxi making investment into mutual funds and selling it at gain. So there is some kind of a gain. It's your gain. It's your income. It must appear in your performance statement. But hey, that's not my main job. So there are two things that you're saying. It's mine, but not my main job. So that's what we're saying. We're differentiating it from the regular business, but nonetheless, we got to show it here, right? So that's the first category of thing that is going to come at non-operating stuff. The second category is your business assets, which are long-term. So let's say you're selling a machinery, old machinery after using for, let's say, X number of years, and you make some gain or loss on that. In one of our chapters, we're going to learn how to calculate that. But here the point is, where would you show it? Again, this is something which is not your day-to-day job. Using a machine is, but selling that old machine is not. Okay, so that's what comes, like below the line, so to speak. This really is a very, very important parameter here. This EBIT, we call it operating profit. This is what the business is able to generate from its main performance, operational performance. So this is the line in case of mergers and acquisitions, where Myntra is trying to acquire Jabong, not because of the fact that Jabong's final bottom line, the net profits are good, but because the operational profits are good, and so on and so forth. Okay, so let's look at the operational half. Within the operational half, you see that there are certain expenses that I have looked at here. 4 and 5. All these, number one, are basic operational expenses. So all are business oriented. But within that, you see that I have still made certain classifications here. So the first classification is the production expenses. What's the cost of producing the goods that I'm selling? And by the way, if out of 100 units, I have been able to sell only 10 units in a particular year, this COGS, what you see here, is only for 10 units. So if you look carefully, it says cost of goods sold. It doesn't say cost of goods produced. So in a particular year, let's say a COVID-like situation where there is complete lockdown, the goods have been produced but have not been sold, my COGS will be 0. You see that X number of units have been sold, and pro rata, only for those X units, you would be able to show the cost of. That makes it looks like a matching concept. One of the things that we are going to look at while we look at the expenses accrual part in detail. Okay. Then you have your selling expenses. Now you understand what is a selling expense. Expenses to ensure that the demand generates. So in certain lingo, we call it marketing expenses. So I don't want to pick that debate here. What's marketing and how is it different than selling? But this is, where we mean that a demand gets generated. So it includes advertisement, brand promotions, discounts, endorsements by celebrities and things like those. Anything and everything that a business does to ensure that the demand goes up. Then there's something called as administrative. These are all the expenses done to overall manage the business. So, and of course, it also includes some of the expenses related to the service department. Now, by service department, I typically mean those departments who are not dealing with the customer. For an example, if an IT engineer is hired by Infosys, that's really the front line for Infosys, because that's what they do, IT services. But if the same IT engineer is hired by Maruti Suzuki just to make sure that he works as a help desk should the production line get stopped, because there is a lot of automation these days in production line as well, there is technology everywhere. Now, Maruti is actually not selling the services of that IT engineer. So that IT engineer in context of Maruti will become an admin expense. So you see that primary department versus secondary department. Another example, if Haldiram's buys milk for the sweets, that's the primary thing that's going to come here. But if, let's say, Maruti Suzuki buys milk for the canteen, that's not their primary job. So the milk cost in context of Maruti is going to be here. Nonetheless, both are required to run the business. So therefore, we are saying both are operating. But one is administrative, back-end service department. The other one's really the front line, the cost of goods sold situation. Distribution, easy to understand, hardcore movement of goods from the place of production till the place of consumption. So it includes, it's a fancy name is logistics these days. It includes the transport, warehousing, and the travel insurance. So the salary of the security guard at our warehouse, 400 kilometers away from the plant, that salary, what is that security guard bringing to the table? He's bringing some safety to the finished goods that I have. But why are finished goods right there? Oh, because I had planned, like a logistic convenience for the consumers who are in that area. So it's again a distribution relation expenses. So salary of such a security guard is going to be here in distribution. Whereas salary of the security guard of a corporate office is going to be administrative. So I'm going to talk about that functional classification, in a while. But allow me to come to a very important expense, which is called as depreciation. It is not important because it's something new that I am introducing here. You are aware, and we've done that in Baron Coburg and a couple of other places as well. Fall in the value of the long-term business assets because of usage. Your mobile getting older, your laptop getting older is a classic example of depreciation in your and my life. But why is this critical? Because it differentiates two kind of operating profit. Pure accrual, if you look at the operating profit, is EBIT. That's what an accountant's accrual profit is, operating profit is. But from a valuation standpoint, one of the user of the financial statement is going to be an investor. And he's going to look at the company from valuation. What's the worth of that company? So I'm going to always look at, in the money terms. And in the valuation fundamentals, as per them, cash is the king. And since depreciation is non-cash, those set of investors, those set of stakeholders think that it's not right to look at EBIT because there is a gross depreciation, typically a huge amount. There is a huge amount of deduction that have happened, which is non-cash. So why even consider that? So those people, that community in particular, look at EBITDA, is called as earning before interest, tax, depreciation, and amortization. That's the operating profit for them. So let's to kind of reconcile. One is operating profit, the other one's cash operating profit. So look out for these two things in the exam, in the interviews, and things like those. So just make sure that you understand that EBIT is the common connecting line between the first half and the second half, and the difference between the two types of operating profit. What is important is to understand income tax. Since it falls in the second half, there is sometimes a sense that you get that income tax is non-operating. Well, that's not the case. It's actually India's problem that the government asks us to pay income tax together on all kind of income. Should there be a country, there is no country like that, but hypothetically thinking, should there be a country where the government says you pay separate tax on operating income, file a separate return, and separate tax on non-operating income, file a separate return, then it will be wise to show the pro rata income tax for the operating income here, tax on operating income, and pro rata, the portion of that, tax on non-operating income. Okay, so that's how you kind of divide. And of course, you're aware that the final PAT is called as the bottom line, also called as the net income, also called as the net earnings. This is called as a top line, and I have something more to talk about sales in a while. Okay, the point that I wanted to kind of make sure that you really understand well is this part. Okay, and I want all of you to please make sure that you understand this. Your income typically can be classified between the business income and the non-business income. Okay, within business income, you have your primary business income and you have your secondary business income. Now you must be wondering as to what is this secondary business income? Isn't that an oxymoron? Well, actually, no. I'm mindful of the fact, yeah. I was just thinking in which session did I tell you about that? So there is a word that I have given you in my live classes, something called as incidental. Incidental is something which is related to, in close connection. Okay, so let's say we took an example of Maruti Suzuki selling scrap. What kind of activities is operating, investing, or financing? So we said that no, it's an operating activity that is very closely related to the main job. But selling scrap cannot be the primary activity of Maruti Suzuki. It is a business activity, but not a primary activity. So you see that there is a merit of creating another classification within this entire spectrum of business. So here you got to understand, people, there are three types of income. First, most important, is what you and I will call as sales. Second, relatively much smaller in size. Of course, look at the value of cars that Maruti is selling versus the scrap they are selling. You can imagine the pro rata, in terms of the value. And third, of course, is the non-business income, which you understand in the previous page that we did, mutual funds, etc., for a manufacturing company typically, or old plant and machinery getting sold. So these are broadly the three types of income. Now, this part is your revenue or your total income, whereas sales is just this part. Okay? In our live classes, we're going to take more examples about what kind of things are going to fall into secondary and primary. There is sometimes a bit of confusion. And I also tell you, the confusion largely is not going to be between 1 and 2 as much or between 1 and 3 as much. No, it will be between 2 versus 3, because both of them are smaller in size, both of them are not the main job of the business, and therefore sometimes you tend to get a little confused on that sense. Okay, so that's what we got to kind of look at in our live classes, right? So people, the question that I have in mind, which I'm sure you will be able to answer now, is when would income be equal to sales for any business? Sales is the primary thing, and primary thing will depend upon the business model. So for Ola and Uber, the commission that they get, on the right value, that's the primary thing. Point number one here. For DLF, sale of flats is point number one. For Renbaxi, sale of medicine is point number one, and things like those. So you're wise enough now to understand, what is a primary operating activity. Anything secondary, incidental. So, for example, for your B school, or a fellowship that you're part of, there is, if let's say assume there is a hostel facility, and there is a bit of profit that the institute makes on the hostel facility. Now that profit that they make on the hostel facility, or from the mess operations, or from the sale of books, that's not their main job. From a hostel point of view, they are not OYO to earn profit from hospitality. They are not book publishers to earn profit from books, but nonetheless they are getting some income out of that. All that is part of the business. They're able to earn from hostel because they have to serve their main job of education. They're not allowing anyone who is not their student to avail that hostel facility. So therefore you see that there is a lot of incidents, a lot of the close connection between the hostel, the mess charges, and the books with the business of education. So in your institute's context, if you look at, all these three are going to come here, whereas the fees that you pay for your institutes is going to be here. Okay, so that's your 1 versus 2. And if your institutes make money, I'm sure they're making a lot of money, and I hope that they continue to make a lot of money. They would be parking it in mutual funds, shares, bonds, FDs, and all. Any return that come from there is going to be here. If they sell this, their old ACs, they are plugged in, old furnitures, etc., and that's all going to come here. Okay. This is what we have already covered. So I'm very happy that we are making good progress here. These three types of income we have already looked at. In terms of expenses, we have looked at what is an admin, selling and distribution. We have looked at depreciation, non-operating, manufacturing, anything that helps convert raw material into finished goods. That's manufacturing to my mind, period. So if there is a canteen facility in the factory, which exists to serve food to the workers who are working on the line, that's also a manufacturing facility, in spite of the fact that it's a hardcore manufacturing, and what you're talking about is food. And I'm not talking about Haldiram here. I'm talking about, let's say, Tata Motors or Ashok Leyland or HUL. These all factories have canteen. They all have, a small, let's say, a dispensary. All of that is to help the manufacturing. Anything which is in the factory is largely, an manufacturing thing. But here is sometimes a bit of a confusion. I don't want to pick it here. Perhaps while you do your management accounting, this is financial accounting, huh? While you do management accounting, that's where this distinction is going to become a bit more clear. What is a service department versus what's the main production department? Okay, so manufacturing, just look at it, anything which helps me convert raw material into finished goods. That's your manufacturing. This ultimately turns out to become cost of goods sold. And don't forget, this S stands for sales. So only the pro rata cost of the units which have been sold will come in the income statement. Right. And I'm very happy to assume, and I'm hoping that that you're always making a videograph when you're talking about an income statement. It's not about a photograph like a balance sheet. Okay, there are different names by which it is called. It's not an important point. Income statement, profit and loss, statement of earnings, statement of operations. In different countries, if you go, you might have different name for it. Long story short, it's the video graph that captures the performance of the company over a period of time, right? Brings me to my next slide. Interesting slide, although. What I'm trying to do here is to give you a fundamental. We're talking about a cost and we're talking about an expense. You can divide them on different logics. So the first list that you see is basically a functional distinction between the expenses. So pretty much my question here in the first one is, what does the expense do? What is the role of the expense? Or manufacturing expenses typically, like I said, from used to convert raw material to FG. Admin is backend or overall function of overall management of the company, like the CEO's salary, and things like those. Auditors' fees, legal fees, all these things are administrative. Marketing is generation of demand. So do you see that the question is, what are you doing? What is your role? The functionality of it. But in the second list, my question that I'm asking is, what is the DNA of the expense? What is the basic DNA of that expense, pretty much? So depreciation is a usage, fall in the value of long-term asset because of the usage. Now this could be a depreciation of an office printer. This could be the depreciation of, let's say, a plant and machinery in the factory or anything. So what I'm trying to say is, a depreciation expense could be a manufacturing expense. It could also be an admin expense. If the depreciation is of, let's say, a truck, or let's say the building of the warehouse, then it could be distribution as well. Similarly, material consumption is that tangible input to the production. So it might as well be a raw material. It might as well be a sales pamphlet which is lying on the showroom. It might as well be a printer, the paper used in the printer in the corporate office. So you see again that the material consumption could be manufacturing if raw material, could be here if uh, the paper used in the printer for the CEO. It could be here if it's the marketing brochures, or it could be here, for some reason. You might have something, let's say a board outside the warehouse. It could be a distribution function. Salary, basic nature, payment to human resource. And here I am clubbing labor as well, wages as well. So if paid to a worker working on the line, that's manufacturing. If paid to the CEO, that's admin. If paid to a marketing head or anyone who's into the field to generate demand, that's marketing. And if paid to the truck driver who is shipping your goods from the place of production to the consumption, that's distribution. So you see, again, you have a many to many relationship here. Rent, compensation for any house property, any building. So if it's a factory on rent, it's manufacturing. Corporate office on rent, admin. A warehouse on rent, distribution. You see, again, you can draw some merit. And taxes, compulsory payment to the government as per the rules. So again, you can see that taxes are a bit difficult to explain how are they at different levels. Just a small peek. If the tax is on production, earlier it used to be excise, now it is all subsumed under GST, but excise was a classic example of a tax that was based on manufacturing. Okay, taxes which is in relation to your marketing expenses. Sometimes GST is now applicable on any of the bills that you purchase. That's again be part of marketing and things like those. So people, all I want to understand is, either I can follow the classification by nature, or I can follow classification by function. I can't do both, because then I will be double counting the same thing. What I'm trying to say is, the sum total of all the expenses here is 100, then here also is 100. You're talking about the same people who are sitting in front of me. If I'm dividing them on the basis of gender, the subtotals may be different between boys and girls, but the total is still going to be the same total number. So let's assume there are 80 students in a particular class. The subtotals of different categories might be different, but the total will always be 80. So here, The total of all the expenses will always be same, but the way you divide it will make all the difference for the purpose of presentation. Okay, what is so complicated in India is that some expenses, the way you present, half part is actually functional, and half a part, perhaps I shouldn't be calling half or 40%, but some part of expense are presented the way as if they're functional, but the others are presented as if by nature. So, if you want to look at it here, uh, up till here, distribution expense and before, it's all functional: selling, admin, distribution, COGS. Anything after that, depreciation, interest, tax, they are all by nature. So you see, it's a bit of complicated matrix from a manager's standpoint. And in the live class, we're going to convert a reported statement from the annual report into this. That's when a lot of clarity is going to come in. Okay, so I think it's going to be good enough a video to set you thinking as far as this income statement is concerned. There will be smaller bits and pieces of videos that will follow. Let's say for gross and net reporting, for provisions, and some of the very, very interesting topic. Earning per share again is one of the very, very critical topic, even for people who want to not really get into the valuations and all that stuff. EPS is something which is very basic and fundamental. Separate topics, for separate videos for all of these. So I am really, really excited to meet you in the live classes as far as income statement is concerned. Thank you very much for watching this, and welcome to the hardcore financial accounting for the managers. Don't forget that whatever we do in the classes is for a manager to make you a better reader of the financial statement. Right? I'll see you soon in the live class.